I do think that Bitcoin will reach six figures. It will be more than $100,000 by the end of the year. That's what I think. The only thing that could go wrong is if the economy really goes down, which I think is very likely. If that happens, there is a good chance that one of the financial, insurance, or other institutions will fail, which could then bring down other institutions or cause them to fail in a continuous chain reaction. So I think we'll have a steep drop-off and then a V-shaped rebound. Because once more, the first rule is that the treasury market must stay open, and they will print money to make sure it does. If the price drops sharply from here, I think that would be a good time to buy because I believe that the Federal Reserve and the Treasury will print more money. They'll print more than they ever have before and multiples of it because they need to keep this thing liquid. There you have it. That's the only catch in question. How long does that take? No one knows when that will happen. I do think that Bitcoin will be volatile, but I think that the volatility will continue to go up. That's why I'm so excited about the chances that lie ahead. James Lavish, a well-known macro analyst and former hedge fund manager, recently gave his prediction for Bitcoin in 2024. Spot Bitcoin ETFs have helped increase institutional acceptance, and Lavish thinks that as institutions learn more about Bitcoin's value, they will start investing more of their money in it, with ETFs letting them hold 1%, 2%, or even 3% of their portfolios in Bitcoin. This would then cause the price of Bitcoin to skyrocket to very high levels. Lavish thinks that Bitcoin will reach six figures this year. He says that the only thing that could stop this bullish chance is the fact that traditional finance is having trouble with its finances. In a very bad financial disaster, the market could crash, which would cause the prices of all assets to drop, including Bitcoin. Lavish, on the other hand, sees that event as another great chance to invest in Bitcoin because he thinks that the price of that cryptocurrency will go up again afterward. Let us now watch some clips from the talk in which James Lavish shares his latest thoughts on the problems facing the global economy and the huge growth potential of Bitcoin. This printing of money is what we mean by quantitative easing QE. This is what happens when things are bad. It's important to remember that when the money supply grows really quickly, it actually makes prices go up. It's been seen. We've seen how that makes inflation worse. That's what we're chatting about. And the Fed just pushes a button and adds reserves to their books to cover them, letting them pass that through. Plus money that wasn't there before is coming into the system. In this way, it makes more money available. You can see that the Fed's balance sheet growth and the growth of the money supply grow at about the same rate. Then there's more, and we didn't talk about inflation in this thread, it was only about making money. However, inflation starts to show up after the money supply has grown. This is called a delayed effect. That's the most important thing to know about it. In other words, they can just print money. They've said this before. It was said on 60 Minutes. They said, we print money, that's what we do, so we'll never miss a payment. Why don't we just give up? Since we make money, there is no way that a country that issues debt in its own currency could ever not pay it back. Why? They can print money and buy their own notes. That's why. Pay attention to what Japan does. They have been doing the same thing for years. That's why they're having trouble with it. But that's exactly what's going on. That's what we need to do. That's what we have ahead of us. I think we have ongoing, long-term, structurally high inflation. We have that because the treasury markets need to be able to handle a lot of money. We're not going to cut costs, so we need to keep the economy and markets liquid so that the treasury markets stay liquid. We already spend more than the law requires because of long-term contracts with defense companies and required costs. Then there was the interest on our debt. A lot of money is being spent on interest on our loans right now. It's not funny. Really, you don't need to be good at math to see that's not going to work. Like we need to do something. That's pretty much where we are now. That's why money is printed. The treasury market can't go crazy during these times of shock. As if it has to keep working with a lot of cash on hand. So they get into the market and buy bonds to add cash to it and keep the engine going. Lavish says that the Federal Reserve Commission tells banks to use newly formed reserves to buy bonds on the market, such as U.S. Treasury bonds and mortgage-backed securities. The money supply grows because this move adds money to the system. Lavish makes it clear that this increase in the money supply causes inflation and talks about the delayed effect, which is when inflation starts to rise after the money supply has increased. This is the issue we're having with our money methods right now. Lavish thinks that this issue needs to be fixed right away to keep the economy from falling apart completely. Let's go back to James Lavish's talk where he shares and explains why he thinks Bitcoin will go up in value. Many big investors will start to understand this over the course of this year and next, and they will start to use these ETFs to take 1, 2, or 3% positions in Bitcoin. Many of them will, especially family offices and smaller hedge funds. It's also possible that smaller companies will be able to buy Bitcoin without using ETFs, which would be even better. This will make them feel very at ease with it, help them understand it better, and make them ready for the risk of actually having it themselves. But I think that will keep happening. As these institutions learn more about it, the trickle of institutions will turn into a stream, then a flow, and finally a steady flow, like a river of money, coming into the space. As I already said, they're going to take a 0.5% to 1% share. They will look at it every day on their sheets until they decide whether to sell it all or make the full 2, 3, or 4% position. That's where we are going. So if you think about it that way, just go back to the basics. That only means that more money is entering the market, so Bitcoin's price should go up to match. We've all talked about factors, but I do think that Bitcoin will hit the six-figure mark because of how liquid it is right now. At some point later this year, it will be more than $100,000. That's what I think. The only thing that could go wrong with that is if the economy here really does crash. This is the end of today's crypto news highlights. Stay tuned for more news, analysis, and views from the world of cryptocurrencies. Tell us what you think.